Record. All right, so we are now recording. So welcome to the top 5 questions home sellers ask when buying their next home. So my name is Kellie Collins, and I have actually worked in real estate and finance for more than 20 years, helping thousands of families navigate home buying and the selling process. I actually have worked in real estate, I've worked in finance, I've worked for banks, I've worked for financial planner or as a financial planner. So there's a lot that goes into this, and I really work best so that I know a lot about a subject so that I can guide everybody I serve to the best professional guidance I can to give my clients confidence. I also have 2 boys who are my biggest motivation every day. So I am a single mom. I'm constantly at the football or soccer field, kind of cheering everybody on. We actually spent this past weekend fishing at the beach and then playing golf. So life is different from what I ever expected it to look like, but it's so great. So what I do is for my boys. I work hard. I want them to see that diligence and doing right by people and integrity is how you get ahead in life. So they are my biggest why. So enough about me. Let's get to some of this, what we're going to talk about. So common fears is one of the things we're going to talk about. Then we're going to talk about how to avoid the pitfalls that come from those fears. One of them is rushing into it without a plan and then saying, oh no, I don't like this, and running away. That is going to leave a sour taste in your mouth, and I see it all the time. So we're going to try to avoid that today. Strategies with all of this to help you save time and money and stress. So if you're right real estate agent, you can totally avoid all of those things. So I got to admit some more people. All right. So we are going to move right into what we are learning. So why are we doing this class? There are hundreds of first-time home buying seminars out there. You want to learn how to buy a house, they're everywhere. But very few people actually sit down and share the information to the masses about how to sell so that you can buy your next house. And this is something where the reason for this, we're running into it all the time. So the questions that you're really asking, or can I buy before I sell? How does that work? What if I sell my house? I don't want to live in my car. Am I going to be homeless? How does that work? Or can I afford a new home at today's rates? Most sellers are actually working off the assumption that a rate in the high 5s is a high rate because they bought during COVID. And you might be one of those people that bought during COVID and were lucky enough to get one of the very few gifts that came with COVID is a really, really low interest rate and a lot of equity. And so if you are one of those lucky people, embrace that gift. And we're going to talk about how that can actually set you on a great journey to move forward toward your dream house. So the power with all of this is to plan. So let's dive into our first of many questions. So should I sell my current home before buying a new one? So if it were me, I do not like living in my house while it's listed. Other people, absolutely you should do this. So let's talk about you and your situation. So you have your home to sell and you want a new one. So think about why you want a new one. And then the pros of selling your home before you move is that you're going to have your cash in hand. There's not going to be a question of, oh, what if my home doesn't sell for this? What if this happens? What if this happens? You're also, because you're going to have your cash in hand, hopefully not spend it before you find that next perfect house, you're also going to have a clearer budget for your new home. And there's also not the risk of carrying 2 house payments. So that is one of the advantages. Now, the cons with this is that if you sell your home and it closes pretty quickly, you're going to have to find a plan to find somewhere to live. Now, I know lots of people that this is their plan. They decide to live in Airbnbs for a few months, explore the community. You could move in with family. You can rent a short-term furnished apartment or just move twice. There are a few things that can happen if you sell your home first and can't find that right home. And so one of the ways that we kind of mitigate this is it all really depends on you and what you ideally want. But let's say you want to sell your home and you kind of can't move on until that home's sold. We've got something to help you with that. So we can do a bridge loan, where we'll talk about that a little bit more in a minute. Also, let's say you sell your current home and you find that right home and it's not going to be ready for 6 months because you decided to build. It happens all the time. This can be a negotiation point with your great seasoned agent. What if we talk about buying with maybe a rent back agreement or something like that? It can all be negotiated up front, but you got to be open and honest with your team that you're working with so that we can help you figure out how to best navigate it all. Or if you're not sure you want to sell that home because you want to move into the new home, get comfy, get out of your house so you don't have to worry with keeping it listed and keeping it clean while it's listed, maybe we go and we tap in and we pull the equity out so you can move on to your next home. We can do this through doing a home equity line of credit. We can do this through a bridge loan. It's basically just tapping into the equity. Down payment on new home is taken care of. And then you can move on and let your agent do what they do best. And let's list that house. That's why you pick a professional. So yes, you can sell your home before you buy a new one, but depending on your situation, you may not have to. What if you can afford 2 homes? Some people can. All right, question number 2 that we get all the time is, can I qualify for a new mortgage before I sell my current home? So the answer is sometimes. So basically how this factors in is we're going to take your new mortgage payment. So that is estimated off purchase price, location for those taxes and insurance estimates, maybe even an HOA. We're going to take all of that and we're going to add it to your current existing mortgage expenses, plus those monthly debts that show up on your credit report. So when we do a soft pull on your credit report, we're going to see all your monthly debts. We're going to see your existing mortgage. So we're going to use all of the debts. We'll add the new mortgage payment and divide that by your gross monthly income. If you can qualify, meaning that when we add all that together, those debts plus the new payment equal 50% typically, depending on your loan type, or less of your gross monthly income, then you could qualify for both mortgages. A lot of people think that it's really impossible, and it's not. It's really not. It just takes a little bit of planning. And then the other thing that we really look for in this is, where one of the biggest questions is, oh, but I don't really want to make 2 mortgage payments for more than a month or 2. Okay, let's say you buy your home. What are we? We're at the end of May. So you go and find your perfect home this weekend. You close on it July 14th. Your first mortgage payment wouldn't be due, not in August, but September 1st. That gives you plenty of time to do this kind of strategy if you qualify. The advantage of this is that it's less expensive. You're not pulling out a bunch of other debts. You typically can move once, those kind of things, but it's not for everybody. It's not for everybody. Again, this is where your game plan comes in. This is where you call to your team and we help you find what fits your situation. So as you move forward with this, if this is one of the questions you have, let's get a pre-approval. So let's get a pre-approval. And a pre-approval, just so you know, I had this conversation the other day. A pre-approval is not just a soft pull on your credit report and talking to a robot and saying, yes, you're qualified. It is actually reviewing your income, reviewing your debts, reviewing your assets, and then talking about budget, talking about the what ifs. What if we don't sell for 3 months? What are we going to do? What if we do sell quickly and we don't have our own home? This is where the pre-approval comes in and working with your professionals. So, all make sense? Fantastic. All right. So, question number 3. How do I time the sale of my home with buying a new one? This is something that I actually talk about 3 times a day with people lately. Everybody's got a home to sell. Everybody bought in 2020, 2021, and they've outgrown those homes, or reverse, the homes have outgrown them and now they want something smaller, or just a change of pace. Life changes in 6 years. And so, how do we time the difference? And if you haven't done this in a really long time, this is also a question I get if you've been in your home for 20 years. So this is how we make a plan first. So that's what we just talked about, that pre-approval, that plan, and what financing looks like. Now, we're going to work together. Your lender and your realtor are going to work together to understand your goals and how we need to negotiate. Did you know that in real estate, it's negotiable? You write contracts, you make offers, you can go back and forth. So if you want to make a contingent offer, this is where your real estate comes in to play, and they will advise you whether or not the home seller of the next of the house you like will accept a contingent upon the sale of your home. Sometimes they will, sometimes they won't, and that's their right. But if you can put in a contingent offer, contingent upon the sale or closing of your home. A lot of times we just kind of get lucky with timing this. You get under contract on your sale and then you start looking for your new home. And a lot of times we can kind of line those closings up, even do one at 9 a.m. and one at 11 a.m. that morning. So you're only homeless for about an hour. And then there's also what I just mentioned earlier is a lease back. You sell it and negotiate and ask to stay for a little bit. This does happen. It's not ideal. The ideal for most people is that same day closing. Sometimes it works, sometimes it doesn't. But there are ways to do this. And so when you're doing this, this is where your realtor, your lender, and if you need involved in the conversation, we've also had lots of conversations with financial advisors on how IRA assets and things like that, if we're pulling from those, can play into this. But the biggest thing is when you plan ahead of time, how do you sell your home with buying a new one, is let's focus on making that game plan before you list, making the game plan before you go on Zillow and find the perfect house so that we're not rushing, because rushing leads to stress in these situations. And so you want your team to work together so that we can line up closing dates for you. We can line up your goals, your house, everything, because you don't want to feel rushed. You don't want to get stuck. Too many people feel stuck still in their homes from COVID because they walked in and 20 other people were standing outside waiting to walk in that house as soon as you walked out of it. And what happened is we all got excited, and I bought a home in that rush too. So we all got so excited. We were all just in this state of panic. Don't do it to yourself again. This time, do it right. Make a plan, make a strategy. So when the right house does come up, you are ready and you are confident. Confident is key in all of this. And also making sure you make the right decisions. So number 4, This is one of the biggest things, and I already kind of touched on it. What will my next mortgage payment look like at today's rates? So if you did buy and your rate's 2 or 3%, know that that was a great gift. It really was. But also, if you were maybe buying a $300,000 house, chances are you probably put less money down that first time around, especially if it was your first time. So you typically have a lower down payment, which could add mortgage insurance cost. You could also just have a higher loan amount. Or what has happened a lot recently is you bought your home 5 years ago and insurance has gone up every year way too much. We're just not even going to talk about it, but it has gone up. So I get calls regularly from people needing to refinance to get out of their mortgages because their mortgage started out with taxes and insurance at $2,000 a month. And now it's $2,800 and it was a 30-year fixed. And they're like, what happened? It was because our escrows were short, because we've had tax assessments and insurance changes since then. And so if that's you, going to a new house where your rate could start out at 6% sounds scary. I get it. I talk to people all the time about it. It is scary. But knowing you can afford it, which is why we talk to the lender about that pre-approval, who actually looks at your stuff. Don't talk to somebody who just pulls a softball and says you can afford it. Talk to somebody who knows your situation and your goals. But 6% doesn't have to be scary because likely when you sell your house, you're going to have a down payment that you maybe didn't have last time. You're going to have a pretty good down payment if you bought several years ago because there's likely equity in there. Taxes and insurance, we know to shop those out. We know to shop in the right communities where to get like just make sure it's affordable. And let's not have mortgage insurance this time. Mortgage insurance could save you $200 a month not having that. So yes, when you look at rates, going from 3 to 6 sounds scary, but it doesn't have to be. Also, something in this that we're noticing is that with COVID, what happened? A lot of us started spending money. We started spending money like crazy because we were just given money and we were bored and we all got really trapped in Amazon and just ordering. And so what also happened with all of that is personal loan debt. Credit card debt is at an all-time high in America. So what if you have that 3% rate, but you also have $30,000 in consumer loan debt at 27%? Let's sell your house, use your equity to get rid of that, and start over fresh with the 6% mortgage. It can save you lots of money. I've done this for couples before, and they're like, oh, I don't want to miss it. I don't want to lose my rate. But then they move to their new house, and their total overall cash spending is down by $1,200 a month. What could you do with $1,200 a month? That's a great savings. That could pay your mortgage off early. It could buy you a bigger house. There's lots of things that can go in there. So this is something else that fits into the whole plan is don't just look at the interest rate. Let's look at your overall monthly picture and you'd be surprised. You can get a much bigger house, maybe $500 a month difference. Chances are you've also gotten a raise since then. So don't be scared. Actually, let's have a conversation. You can go on these calculators and stuff and do it. But when you have a conversation with somebody who understands your strategy and what you want to do, that is where all of this works out better. Instead of just looking at the interest rates, let's look at every piece of the puzzle to make sure 6% is not as scary as 3%. So other possible solutions to make all of this work are something called rate buy downs. So during COVID, nobody's paying closing costs. You're offering $40,000 over. This actually happened for years. So what happened when rates did kind of creep up into the 6s was what we did back 20 something years ago when I was first in real estate. And yes, I'm aging myself. It's great. But we did temporary buy downs. I worked in a model, and everybody that worked in that came into my model home, they asked me what their monthly payment is. That is the number one concern of every single person that walked in. And so I had to figure out how to talk through that. And when you tell somebody their monthly payment's going to be here, but they really want it down here, we have to come up with a way to fix that. So this is where rate buy downs happen. So if you go into a builder model, you might hear temporary rate buy down and a super great rate. That is because the seller is offering you a credit to reduce your interest rate either for the first 1, 2, or 3 years, or that same seller credit could be used to reduce your rate over a 30-year term. So it is a strategy. Again, this is why you work with your professional real estate agent, because they know how to negotiate these things and save you more money. Because $10,000 in seller discount, our purchase price discount, saves you about $60 a month. That $10,000 though, towards a rate buy down, could save you on a permanent basis $150 a month or so. Which one would you prefer? All right, and then we just talk about down payment strategy and then ARMs. ARMs are scary for a lot of people. They shouldn't be. So did you know that that home buyers stay in their mortgage 5 to 7 years? They may stay in their house 13, but they stay in their mortgage 5 to 7 years. Now, ARMs, these got a really bad rap during all the stuff a long time ago because they could change on a regular basis. But what ARMs are now, ever since 2009 or something or along those lines, is that they are fixed for a certain period. We are doing a lot of 7-year ARMs, meaning that your rate is fixed for 7 years. So when it's fixed for 7 years, and this adjustable rate mortgage option, it gives you a lower interest rate than the 30-year fixed. This could be another option to look at. Yes, it can adjust after 7 years. Absolutely. But if we're doing it right and you're educated on that up front, could this be the right option? Are you going to be in that house 7 years? Are you going to be in that mortgage for 7 years? Or are you good with it? What is your goal? So long-winded, I know I love talking about rates, so that is why I talk about all this. I love helping everybody understand really with confidence and how money works. Too many people don't know how money works. This is the fun part. When we can make the money work on your purchase, the other 3 questions that we just talked about kind of go away a little bit. And it gives you confidence to go shopping with your professional real estate agent. All right, question number 5. We'll move on. All right, so what do I need to do financially before I can sell and buy? So again, we really want to work through a full pre-approval. So step number 1 is give you a little bit of information about what is your estimated home value. And you know what? There's lots of places to find this. You could find it on the Zillow, the online, the chat, the whatever. But the problem with all of those sources is that they're computer generated, typically not from newest updated stats. And so I always recommend going to your licensed real estate agent if you are serious about thinking about selling. Call your licensed real estate agent and ask them to give you the estimated home value. Because when you do that, you are going to have somebody who is trained and can look at your home, look at your scenario. They're not pulling outdated information. They've got it. They know how big your home is. They saw the screen porch you added 2 years ago, where some of the other platforms don't know any of that. They know that you changed your bathroom out. They know that you added a new roof. These things add to value. So contact your realtor that invited you here today, or ask one of our professional realtors who invited you here today for a good referral if you are not in our area, and they can set you up if you are out of our little Charleston area. But contact them first. Get some confidence about that estimated value. The other part to this is let them walk around your house. It doesn't matter if it's messy. They can step over clothes. They can look past the little cats and stuff, but let them walk through your house and give you ideas of maybe things that need to be refreshed to improve that home value before you list it. You don't want to do this a week before you list your house. You want to give it a little bit of time. You want to make a plan. So one, contact that agent, get home value, and then ideas and suggestions to improve your home value. All right, so the other two I kind of touched on too, but we want to get that pre-approval. We want to know what, based on your current income, your current debts, your current equity that we just got from your agent, how much home you can afford and what that looks like. So we want to do that. Another thing, we want to look at your credit score. We want to do a soft pull on your credit, see that number up there, and then if we need to improve it, let's improve it. Let's walk through how to improve it. Did you know that lowering your credit card balances can have a huge impact on your credit score? And it doesn't take a lot of expense sometimes to do that. I've increased credit scores 30, 40 points just by putting $1,000 down on a credit card. So get that advice early. Let's not wait till you're under contract and you've already got your home under contract, you're sold, you've got 30 days to be out, and then let's work on that stuff. That will stress you out. It'll stress us all out. So do us all a favor and let's get planned there. And then we this is for you, want you to put your moving budget and timeline in place. Okay, so these things are, want to know what closing costs are. Get an idea of what a mover costs. Do you need a mover? Or pizza and beer for the friends? Good for that. What are some of the expenses you're going to need? Do you have a special thing you got to have at your house that is going to cost you a little bit of money? Those fancy key door locks, I have to have those on my house because my kids lose keys all the time. So we put those on the house. That's an expense for me. So get an idea of what those moving expenses are. Set that money aside. And your timing. Do you have to be in your new house before school starts so the kids can start school in their new school? Or do you need to be there because work gets super busy this time of year and you need to be settled in before that? Or do you want to be in before your big Christmas party everybody always counts on every year? Timing, that is your job, is to come up with timing. Count on your team for everything else, but let's work through timing. So those are the steps to really get there. So I promised I wouldn't take too much of everybody's time. So just so you know, timing and pricing matters. The average days on market currently is, we're going to look at Charleston County and Summerville. Our 44 days on market is the median in Charleston County, and the average days on market in March of 2006 is 109. This is why planning needs to happen. And then we're going to skip over that. I'll talk about them in just a minute. And then while we're doing this, I wanted to offer you some gifts for coming here today. So you don't have to figure it out all alone. We've got tools, we've got tips, we've got expertise. So I am offering a mortgage planning session. I'm going to volunteer your agent who invited you here today to do a home equity checkup for you. And then we are going to help you map out your seller and buyer worksheet and your time frame. So these are our gifts for you, because anybody who is participating in this, who loved you enough to say, hey, just come learn first. No obligation, no anything. We want to make sure that you are organized and ready to go. If you take us up on any of these, you don't have to do it. You don't have to move. You don't have to do it. But if you're thinking, could it be? I know every single professional I work with, they would give you the information and then let you choose your time frame. So just know that this doesn't have to be scary. This is a great, exciting time when you think about moving. Let's make that game plan. So basically, if you are ready to make your game plan, you can book your call with your agent who invited you. They will be reaching out afterwards just to see how everything happened. Or you can call or text me at 843-810-7219, and I will connect you with the agent that invited you as well, because we want to make sure you stay with those professionals that love you. And so one of the other things I wanted to go over is we have a free guide. We have a guide if you wanted to scan the QR code, and it'll give you an option to opt in or email me, and we will send you the free seller to buyer home guide. Gives you a little checklist, questions to ask before listing your home so that you're not sitting there on the hot seat trying to think you got everything. And then we'll walk you through mortgage planning steps. So I didn't want to take much of your time because it is time for people for evening and for relaxation, but I just wanted to tell a story. So I'm working with a couple of clients. They are very, very sweet. He is having to move from his dream home. He has a $1.2 million house on the water, and his wife is sick of commuting. And so basically she said, we're moving over here to the grandbabies. So they are now buying a $600,000 house, but they wanted to use the equity from their home. They just went ahead and started building. Didn't have a plan in place. Just said, we'll sell it. We'll sell it. They didn't list it till about a month before the new house was done. So that's why they called me in a panic. So what we're doing is, after about 28 conversations with them, they decided not to pull money from a retirement because it was going to cost them a lot of money in taxes if their home didn't sell. We decided we're going to do a bridge loan. And so we're tapping into the equity of their home. I've got the bridge loan that has no monthly payments on it, and they are buying their home. We're closing in 3 weeks. And then they're going to keep their little water house till the end of summer and then relist it. So he's happy because he at least gets to boat through the end of summer and go fishing. So there are so many ways. I have worked with so many clients, and so many of our great realtor partners have worked with clients. If you have not sold a home before, if it's been a year, it's been 28 years since you've done this, ask the questions. There's no stupid questions. This is your biggest financial investment of your life. Your job is to ask questions, and your job is to protect your investments by asking the right questions. So get our bonus resource, and I'm going to encourage you to reach out and ask questions to everyone on this call. Let's start by doing the research. Finding a professional who knows your market, who can give you advice. Call your realtor and ask them for their professional advice on your home. Set that appointment and try to do it during business hours, not at dinner time, so they can enjoy their families too. And so I just wanted to thank you. I kind of did this a little bit quick, but I hope this was great. Reply back to our emails with your questions, and we will get them all answered, because that's what we're here to do. And I hope you all have a wonderful day. I will leave up the QR code for another minute or two, but if you need anything, reach out, because that's what we're here for. I hope this was very, very informative, and I hope it helped you with something. Have a great night.